Hello guys, welcome back to our YouTube channel. Remember, this channel I always review my trade setup and my trade pairs. So today we have prop-firm risk management. So first of all, when you talk of prop-firm, remember that prop-firm are like group of people that gives you money for you to trade, and you split profit between you and the prop-firm. So when it comes to prop-firm risk management, how do you trade to pass your evaluation and get funded as a prop-firm? So number one, I'll be teaching what we call losses calculation, their leverage, and how to use your lot size properly. So one of the things you have to know is that when you already know your strategy and you know how to use your stop loss and loss size calculation, you get me now, you already know their what we call leverage. So when you're using leverage of 1 is to anything, you already know that you cannot exceed this number of loss size, and there is a number of loss size that you increase your account to, then it means that you are risking, like you will be seeing all the money in your profit account to risk on just that one trade, which is somehow not good, and the profit might yet to take back their money and say that you are over risking the account. So you have to understand how all these things works, right, for you to make the best out of it. So when you already know your loss size calculation now, the next thing you have to notice that you have to consider what we call your risk management. You already asked not to risk 5% of their money. So you know that you're not risking 5% of your money means that you should be risking something less than 5% of the accounts per any trade idea. But any trade idea doesn't mean that you should be looking at your margin now. If you're looking at your margin, it means that you have to increase the leverage. But since the leverage is low, 1 is to 100, it means that you should not look at the margin, but you risk at the capacity, like what your loss size can do. So if you're using one loss size on a trade idea, which means that if that trade should go against you 10 pips, you're losing $100 on that trade idea. So if you should do all those calculations and already know that this my stop loss is not up to 10 pips, you can use one loss size so that when it goes in your favor by 10, 20, 50 pips, you'll be getting much more money and you'll be passing your profit challenge very, very easier. You get me now? So when it comes to profit trading strategy, consider what you call what can this loss size do when I'm in profit or when I'm not in profit. So if your target is to risk just $50 on a single trade idea in your maybe 5K prop firm challenge or 100K prop firm challenge, and your target is to risk maybe $500, so you should be looking at, if this losses I'm about to use, if this my stop loss of 20 pips triggers, what am I going to lose? Then you have to relate this thing to your loss size, so that will give you this knowledge of which loss size should I use. So if you're not willing to risk $50 and your stop loss is 10 pips, I will encourage you not to use 0.5 or one loss size. One loss size means that if you goes against the 5 pips, you lose $50. So you have to reduce your leverage so that you can maintain that dollar value that you don't want to risk per trade. You get me? So I'll be dropping more tips on prop firm risk management, but I would first of all like you to rate this video. Tell me if this video was helpful to you, and don't forget to like this video if true this video was helpful to you, and at least share to one person. Share to one person so that it will help some other person discover this YouTube channel. And don't forget that we have a Telegram channel. So that Telegram channel will help you to know when we enter a position, and there you can communicate directly to us. You get me now? Because Telegram channel is specifically made for trading and trade related materials. You get me now? So don't forget to subscribe, like, and share this video. See you next time. Jovianking Trace.